Hello, investors and traders, and welcome to the Midweek Report. I'm AJ Monte, Chief Technical Analyst with StickyTrades.com. And yes, we've had another interesting week just ahead of the Fed announcement coming to us with regard to interest rates. We'll have to see how that plays out next week. There's a lot of debate as to whether or not they'll hike 25 basis points. There is a chance they could go 50 basis points. If they go there, then the markets will certainly feel that punch. And so as we look at the candle charts here for the diamonds, I want you to first know, if you're brand new to this channel, understand that I am catering to swing trades, particularly option traders who are looking at the market. I do not cater to day traders. So if I say, oh, this is my target by Friday, I would not be betting on that too heavily, even though our percentage of accuracy is high here. I wouldn't be betting on the daily trades coming out and hitting those price targets. Remember, I'm catering to option traders who are spread traders, so they have a lot of time and flexibility to roll with the market. As you see here, and I mentioned this last week, where we hit the price target to the upside here, downside target hit, upside target hit, upside target hit, missed by a few pennies on the downside, hit on the upside, surpassed that. This target has not yet hit, but even if you discount this one as a close to hitting, 5 out of 7 still puts us over 70% accuracy on the hit rate. Now, that's not an income claim by any stretch, but you know, when folks challenge the charts and they say, oh, you missed the target last week, well, go show me someone who's doing this each and every week, and I would love, absolutely love to challenge them to a stock picking or forecasting contest. And if you're out there and you want to do that, Sticky Trades will be putting a contest together in the future, I assure you, and that's going to be a lot of fun as we track price targets and announce contestants. So that's out on the front burner, not the back burner. That's out there on the front burner waiting to happen. But if you look at this chart, you can see that we have a shooting star. And for those of you that follow candle charts, that's a bearish candle. And so that's a battle between the buyers and the sellers. The buyers tried to push it up and close it on the high, but the sellers push right back. Not only that, but if you look in a little bit closer as I zoom in here, we have a gap up. So now we have an open gap below the market here. We have an open gap below the market here. We have an open gap below the market down here. So gaps act as price magnets. So I'm still leaning to the downside, and I'm keeping that downside target right there. We could see that probably around the Fed announcement time frame at 341.84, and that's DIA, still looking down. If we look at IWM, this is very interesting because we have a spinning top on lower volume right at a resistance point. Now remember, a spinning top is a sign of indecision. This is a very small-bodied spinning top. If it were a doji, the candle down here on the volume would be gray. It's almost a perfect doji. But dojis and spinning tops are signs of indecision. And when you have those happening right at a key resistance line, which is up there around 199.26, that's what that green dotted line represents. That sign of indecision is coming right at a resistance point. So when you look at the drop in volume down here, you can see that the volume dropping on the way up, it's telling us that the buyers are starting to lose some of that momentum. So I think that, again, that drop in volume is a tell, more or less. Looking down below, the stochastic is still overbought, but the CCI is showing a negative divergence. See that? Lower highs after higher price highs, and a hinge lower. So downside target on IWM still in place at 187.62. Let's go to the Qs. You know, this looks pretty calm on the daily chart, but I love going back and looking at this monthly chart. This is what Alan Greenspan would label as irrational exuberance. I'm going to be talking a little bit about that here in a moment, but this is almost straight up price action. And if you look at the monthly, look right there. I'll zoom in there for you. I'll magnify that. That is a hinge. Even though we're up on the month, the CCI is now officially pivoting lower. Now, that is the third or fourth highest reading on the CCI on record. And when you have such a wide divergence from that moving average, again, I'm looking at the monthly chart, it's hard, very hard to take any new long positions. And I know some of you daredevils out there will be happy to continue to do that. But as we zoom into the daily chart, again, very small bodied red candle on slightly lower volume, and the CCI going down with the stochastic still overbought. So that downside target still in place at 367.74. Going on to the spiders, SPY, so the S&P 500 ETF, it's pretty much the same story. Almost the perfect doji, lower volume, oscillators showing negative divergences, gaps below the market, wide divergence from this moving average here. So downside target still in place at 442.49. Do I think it will hit there by Friday? No, I do not. But I do think it could hit as the Fed announcements come out. We'll see what happens if the markets blow off at the top, or if the markets digest that as positive news. We still don't know what the Fed has in store for us. But I can tell you what the VIX is looking like. And the VIX is looking very interesting here today because we have a pretty nice green candle right there on oscillators that are going up. Now, the VIX here does not measure volume on this particular volatility index chart, but I can tell you that we have a half signal. Let me zoom in a little bit more. What's a half signal? We have a higher high, which is bullish for the VIX, but we have a lower low. That's a half signal. If we had a higher high and a higher low, it would be a pivot point. But again, we are a hair away from closing over that 20-period moving average, which would get us right back on track for my price target on the VIX up here around 1720. Now, I talk about silver. I have been talking about silver. Look what happened today in silver. Pretty amazing. Now, I'm in my silver position by 85%. This week, I've sold 15%. But if you look at today's high right there, it's 23.16. What is the gap fill point? Oh, we are a penny away. That is still an open gap with a penny to the gap fill point. And we have this long stretch of green here on silver, right? We have 6 green candles. Volume is dropping on the way up. The CCI is just at or just about to cross with a sell signal there with gaps below the market. So for you silver traders out there, I'm letting you know ahead of time that I will start buying back my 15% that I had sold on those gap ups. I'm going to be buying back in this general area to be able to buy more SLV shares. That's what parlaying a position is all about. Sell out in small increments, and on those sell signals or gap ups or resistance areas, buy back on the pullbacks, buy more, and parlay the position as silver continues to be in this trading range between 21 and 23. Now, I want to point something out. Here's the craziest with regard to the irrational exuberance. Goldman Sachs earnings came out, and they show that profits plunged 58%. Think about that. Let that soak in there. 58% drop in profits, and what happens today? The stock rallies. Now, it's right at a resistance point, but it rallied. Doesn't make sense, does it? Well, here's another one. Check this out. Meta, which just recently launched its Threads platform, a direct competitor, by the way, of Twitter, you can see that when it came out on July 7th, I think it was out of curiosity that their viewers jumped by 18%. But since then, Twitter has been holding pretty steady up here at the top. But look at the drop in viewers and subscriptions since that high was reached. So they've given back more than half their users in that short period of time. And what happens over there on the right? The stock rallies on that negative news. Again, does not make sense, especially with this being considered a mega cap stock. But that's the market that we have sitting before us right here. It may not make sense to some of you who follow the fundamentals out there. It definitely does not make sense to those technicians that follow the charts. But it is what it is, and I'm certainly not going to be taking any new long positions, but I will be taking directional trades. I'm going to give you a freebie out there just to show you what I'm talking about. Our traders, our option traders, took a directional long put position last week on Ford right here. Stock dropped, and for those of you out there that took that position, congratulations. You should be up at least 50% on your options if you did trade that. And then what happened, I put out a publication here yesterday showing to get out of that put position and go into a long call position. So we're looking for a bounce in forward. Now remember what I just said, I'm bearish on the overall markets, but if you're following my trade alerts, we do take long positions and shorter term trades on individual stocks. For our members, I put out a trade blotter showing the last 5 trades, and we have a very high percentage on the hit rate for the equity traders, and I'm moving forward with more publications through StickyTrades, especially next week. So be sure to stay tuned to StickyTrades.com tonight from 6 to 7. I'm putting out a rapid fire analysis segment which is open to the public this week. We haven't decided if we're going to open that up to the public next week because we're allowing our members to flow into our system, and so that will be a product that is for members only. But make sure you stay tuned to my Twitter page to get the invite for the Zoom session. So seating is limited. We learned our lesson last week to put more seats on. We sold out all of the seats within 13 minutes. We didn't want to make that mistake again, so we increased the number of seats for that hour segment. So I'll look forward to speaking with you then. You have a good rest of the week, and I'll talk to you on the next report. So long.